It's going to fall over and make a big loud noise.
Okay. Hey guys, this is Financial Fitness. This is OnSiteTrav. This is the Economic Ninja. They're two of my favorite YouTubers, and they are a wealth of knowledge about most everything economically. And I would love to explain to my older crowd, when I mention crypto, it is just like, whew, they're like, I don't like it, I don't understand it, I don't get it, I don't want to know it, stick my head in the sand, I'm done. But I want to have these guys help me explain to you what's coming, whether we like it or not. So,
Who wants to start?
who wants to start?
It's magic internet money.
Internet money.
That's how you explain it.
Magic
I mean,
internet money.
it's magic internet
I
money.
couldn't have said it better.
You've got individuals that have mining, let's just call it laptops,
Yep.
and they're transacting and doing the transaction on behalf of you and I transacting on a phone, let's say.
Yeah.
And so you and I do a transaction, we pay a gentleman for his electricity and his computing power, and he gets a coin or part of a coin to do the transaction. Essentially, we're doing fiat transactions with electricity as our base currency.
Yep.
Privately, peer-to-peer, outside of all other traditional banking systems.
All right, now that's Trav's. I'm gonna try the same thing because he's 100% correct. I'm gonna try in a different little.
Yeah, absolutely.
All right.
Yeah.
The blockchain is a bit of code, computer code that was written, and any computer that wants to run that code can get paid to do so because it takes some electricity, it takes some costs, your internet fees and like that. So I would load up the Bitcoin protocol onto my computer. I would plug it in, I would get it running, right? And what it's actually doing, because people talk about these complex math algorithms and computations, imagine it is that computer is talking with any other computer, actually any and all computers worldwide that are running the exact same blockchain protocol. So let's just use Bitcoin as an example. So my computer's running the Bitcoin blockchain protocol, and 100 other computers worldwide are running that same protocol. Well, in that code, it does a handful of things. It says there's only going to be so many Bitcoin ever produced, ever, and when each one can be produced. The other thing it's doing is it is keeping track of every transaction worldwide forever. So my computer is doing something called the decentralized ledger. It is recording every time a Bitcoin or a fraction of Bitcoin moves anywhere around the world, right? And it's decentralized, the decentralized ledger, unlike a bank when they have their one big mainframe and they keep track of where you're putting your money. That record is kept on my computer and any other computer worldwide. So it's decentralized. It's not 1 point or 2 points of failure. Now, because every computer has to agree that each transaction is legit, every computer records every transaction at different times, their own way. But they all have to agree, and that's called consensus. And that is why Bitcoin has value, because every computer has to agree, so you can't fake a Bitcoin. Bitcoin just can't pop into existence because all the other computers worldwide are going, whoa, wait a minute. Hey, all you other computers, do you know about that transaction? And they go, I don't, and it gets kicked out of the system. And that's what brings Bitcoin its value. Because the code, as difficult as most people would think, it's actually it's the easiest concept to grab and code. It's so simple, you almost go, why didn't anyone think about it?
Essentially, it's just an accounting program.
Exactly.
Who owes what to who and when.
So what you're buying is security. It is that. It has to be verified through the blockchain. Nothing slips by the blockchain. You're buying that digital gold.
Yeah,
Right?
I'm sure Travis could jump in and say you don't want to call so security, as I feel like they're not going to make just fake Bitcoins,
Yeah.
but you don't want to call it a security. That's where that sticking point is. You know what I mean?
Yeah, I mean, well, is it a currency or is it a store of value? Because if
Yeah.
it ends up being a store of value and nobody's transacting with it, then is it a currency? So, I mean, it's still young. It's still forming.
Yep.
So we don't really know what it's going to be. I would actually argue that other things might actually be digital gold. Because digital gold has to be private and has to be fungible, meaning I got to be able to melt it down and no one knows that it came from the Aztecs and it wasn't too nice in the way that we took it, but we just stamped it here with the Spanish and it's all good.
Yeah.
It's got to be, I can't know that the coin that I owned used to be owned by the ninja. Perhaps the ninja might not be a favorable individual in the future. You never know, right? So all of a sudden that coin may or may not have value.
Yeah.
If it's fully trackable.
Yep.
So we don't really know how that's going to all unfold.
Totally.
But there are ways in which to use cryptocurrencies and other cryptocurrencies like Bitcoin and Bitcoin itself to have private transactions as well.
Yep.
And I think that is still very much in debate and still
Bitcoin's kind of a grandfather.
it's the grandfather for sure.
And it's definitely good to stick with Bitcoin when we're having discussions like this because you can get completely lost in a sea of crazy coins right now.
And I would say Bitcoin at this point is very consistent for crypto.
Yep.
See, these things trade 24/7. And so if there's not a buyer and there's not a seller, the price is doing like this, right?
Yeah.
So you've got to have a wall of money on this side and a wall of demand on this side to have a calm thing.
Yeah.
And Bitcoin at this point in time has done this. It does this,
Yes.
but it is pretty consistent as opposed to the smaller ones that will jump.
So is
Yes.
there any correlation to the dollar? The dollars on the earth, 40% of the dollars on the earth were created this year. Is there any correlation to that affecting Bitcoin price?
Yeah,
Such
it
a
makes
crazy number. Who would have thought 2 years
it's
ago we'd be
nuts.
talking about this?
Yeah, it's insane.
Yeah.
I mean, it would make. There's only 21 million bitcoins, and you can purchase. This is my lack of understanding at the beginning. You can purchase fractions of bitcoins called satoshis.
Yeah,
So-
let me break that down real
Break
quick.
it down.
Okay, so when
It's a-
so the
that's-
term the dollar, we use the term Bitcoin all the time, right? And people think I hear it all the time. I don't have enough money for a Bitcoin, or I won't invest in Bitcoin until I can buy a whole Bitcoin. And I go, okay, cool. So you have $100 in your pocket, and you see a 5-cent stick of chewing gum, which sorry, that's over now too. But let's say you go in and Mongo got $100 bill, and Mongo, are you just going to give the $100 bill and not expect any change? Well, of course you're going to expect change. Well, Bitcoin actually works in reverse. You don't go pay the $100 for the 5-cent stick of chewing gum and get back, $99.95. What happens is they say that's a 5-cent stick of chewing gum. I'm like, well, I got a whole Bitcoin, so I'll give you that much value instantaneously right there. I say instantaneously, slightly, but you get my point.
Yep.
So it works in reverse of currency, where you're handed a note, a paper note, or a digital dollar, and then you get change back. Where actually the digital dollar is going to work a lot like Bitcoin.
I would say that
blockchain.
you don't have the counterparty risk, right? Because you have a code that says there can only be 21 million of these things, as opposed to Jerome Powell at the Fed could go. So today I have a brilliant idea. Let's do 10 trillion. Money for you. Money for you. So you don't have the currency risk, or you don't have the third party risk.
Yeah.
And I guess as the currency becomes more abundant and Bitcoin stays consistent,
Yeah.
it will take more units of currency to purchase the same amount of Bitcoin.
Totally.
So it's a short squeeze of the century in a way.
That is both sides. This OnSiteTrav, the economic engine, great channels, and they have great explanations. My explanation is, pretend I'm from the future and I'm telling you about the internet 20 years early. Do you wish you would have waited to invest in Microsoft or any other thing that involved the internet that sent emails? Remember that? Woo! We can send emails. That's where we're at right now. It is a volatile market, but I wouldn't have it any other way. I hope y'all have a great evening. This is Financial Fitness. I will see you tomorrow.
Excellent.
That was fun.